Index investing is for losers. This is what I was told by some smart ass on X, some random guy who clearly loves Bitcoin more than anything else in his life. In this video, I'm going to prove him wrong as I tell you why index investing is my favorite way to invest. I'll also bring you some balance and tell you some of the benefits of Bitcoin. And I'll finish with an investing strategy that is now very popular over in the US. When it comes to investing, everyone wants to know, where do I put my money? Stocks, property, or maybe Bitcoin or gold. Today, we're getting into a little debate as we look at index funds versus Bitcoin. Which is better, and can you actually invest in both? If I convince you that index investing is a legit way to invest, you can take it a step further by joining my free investing community on Skool. There you get access to 2 free investing courses, you learn how to invest in the stock market, and you get access by clicking the link below in the description. What the courses do is give you the fundamentals you need to be a successful investor. Then you can go off and invest however you want, like in Forex or crypto for potential high returns. But be warned, if you don't learn the fundamentals, you'll potentially rush into Forex or similar and lose your money and then scare yourself away from investing. Then you'll end up being a saver, and that's the last thing I want for you. Why index funds are a brilliant investment and why they are not for losers. Honestly, it's laughable how tribal many investors get over the investments they choose to go with. Now, before I give you the data to back up why index investing is a brilliant choice for many investors, I'm going to give you my experience of index funds and exactly why it's my favorite way to invest after 21 years of investing. Let me tell you about the financial crisis between 2008 and 2018. Now, obviously, it didn't last that long, but it did for me as I had a bad relationship with money and investing during this period. Now, this was partly due to a lack of emotional intelligence, if I'm being honest, but mainly due to a total lack of financial literacy. This all changed when I found myself in mid-2018 in some scruffy bed and breakfast, working away from home. I was on rubbish money on this particular contracting job. I was working in London and I was paying £40 per night. You can imagine the conditions. Let's just say I had to sleep in a sleeping bag to avoid that nightmare of a bed. Long story short, this got me to the point where I was finally sick of whinging about money and chasing quick, easy money, and I was ready to learn and focus on financial education. Fast forward a year and I'd read hundreds of books and was slowly but surely becoming financially literate, and by mid-2019 I started investing in the stock market with index investing. Now, just for context, I'd lost our life savings in the stock market chasing quick, easy money with individual stocks back in 2011, and I was now fully aware that I was an emotional investor because of experience and because of education. And this is partly why I started investing with index funds, because it's passive and stress-free. And after 5 years of investing with index funds, I've been neutral and calm, how you should be as an investor. This is why for me, it's my favorite way to invest. If you're new to investing, index funds are essentially baskets of stocks that track the performance of a specific market index like the S&P 500. To put it another way, you get a small slice of several companies within one fund. But why are they so popular? Well, here are the main reasons. Diversification. With one investment, you're instantly exposed to hundreds or even thousands of companies, like my Vanguard Life Strategy 100 fund. This gives me exposure to thousands of stocks within one fund. This reduces your risk because your returns don't depend on the performance of just one company or sector. If one company in the fund struggles, others may perform well enough to offset the losses. Then you've got low costs, and this is what nudged me towards Vanguard a few years ago. Index funds often have low fees compared to actively managed funds because they don't require constant buying and selling of stocks. Over time, these savings on fees can have a significant impact on your overall returns. For example, a 1% annual fee difference can mean tens of thousands of pounds less in your account over decades. The other main reason for the popularity of index funds is proven performance. Over the long term, major index funds have consistently delivered solid returns. Historically, the S&P 500 has averaged around 8 to 10% annual returns. Yes, there are ups and downs, like the 2008 financial crisis or the 2020 pandemic, but the long-term trend has been upward. Investors who stay consistent and patient tend to reap the rewards. All I would say is that if your fund is down in a given month or year, hit the books, and this will help to calm you down. Let's look at the returns of the S&P 500 over the last 5 years. As you can see, you would have had over 90% returns over the last 5 years. What I want to say at this point is that you can get high returns if you invest into individual stocks instead of index funds, or Forex is another example, but these higher risk options are not for everyone. For me, index funds are an excellent starting point for investors to safely invest in the stock market. We're all different as investors, and if some random keyboard warrior gives you a bit of stick for the way you choose to invest, try and have empathy for that person, because them being negative is nothing to do with you, and they might have stress in their life that you just don't know about. Hopefully, I've driven the point home. Index investing is not for losers. Index investing is for savvy, long-term investors who want to build long-term wealth. For most people, index funds are the easiest way to grow wealth without the need for deep financial expertise. They're often referred to as set and forget because they don't require constant attention. Before we go any further, I just want to say that this video doesn't contain any financial advice. I'm literally just trying to help you with my 21 years of investing experience. The case for Bitcoin. Now let's move on to Bitcoin. Bitcoin's story is completely different. It's not tied to companies or markets, but instead a decentralized digital currency that's captured the imagination of millions of people worldwide. The current financial system is broken, and that's why Bitcoin started in 2009, but that's a different story. Now, I'm bullish on Bitcoin, but more importantly, so are millions of other investors. So are companies like MicroStrategy, who now hold more than 400,000 Bitcoin on their balance sheet, probably over 500,000 by the time this video is published. Institutions like BlackRock and Fidelity are bullish. Countries are bullish, and that even includes the United States, especially now Donald Trump has been elected in November. One of the main reasons I'm bullish is the continued rate of adoption. Just look at a recent BlackRock presentation, and if you don't know, BlackRock are the world's largest investment manager. In a recent presentation, they stated that crypto adoption is outpacing other major technologies like the internet and even mobile phones. Look at the 11 ETFs that were approved in January 2024. The BlackRock ETF was the most successful ETF launch in history. Now, let's have a little look at the data. Let's look at the returns over the last 5 years. If you invested 5 years ago, you would have had over 1,300% returns. This is huge. So I've just given you some of the reasons why everyone is so excited about Bitcoin. Let's look at some of Bitcoin's fundamentals. Scarcity. There will only ever be 21 million Bitcoins. This fixed supply creates scarcity, much like gold, which is why some people call Bitcoin digital gold. With rising demand and limited supply, the price has historically trended upward over time. Decentralization. No government or central bank controls Bitcoin. Transactions are verified by a global network of computers, making it resistant to censorship and manipulation. Bitcoin is very much decentralized, as the network is secured by over 18,000 computers, or nodes as they're also known, making it one of the most powerful computer networks in the world. Bitcoin is especially appealing to those worried about inflation, government debt, or unstable currencies. Massive growth potential. Bitcoin has gone from a few cents in 2009 to over $100,000 per coin in 2024. This is huge. While the price is volatile, the long-term growth has been unprecedented. It's created millionaires, driven the adoption of blockchain technology, and sparked an entirely new financial ecosystem. Just be aware, Bitcoin is not without its risks. Prices can swing dramatically due to factors like regulatory news, adoption rates, or even tweets from influential figures like Elon Musk. That's why experts recommend only investing what you're prepared to lose. Think of it as high risk, high reward asset. A lot of investors can't handle the volatility of Bitcoin and crypto in general. All I would say, if you're in that camp, keep learning about Bitcoin or trying to. It took me 5 years to fully get Bitcoin, but now the penny has finally dropped. My conviction is very, very high. So after looking at index funds and Bitcoin, which is the best investment? Well, this might frustrate you, but it depends. It depends on the individual. I like both. I invest into both. And this leads nicely onto the next section, the best of both worlds. Here's the good news. You don't have to choose between index funds and Bitcoin. You can do both. You can invest in both. In fact, combining them could give you a nice balanced portfolio with stability from index funds and growth potential from Bitcoin. For most investors, index funds can form the foundation of your portfolio. They provide reliable, long-term growth and help you stay diversified across sectors and industries. Bitcoin can act as a smaller, high-risk, high-reward allocation. Many financial advisors or experts in the US are starting to suggest going with 5 to 10% of your portfolio for assets like Bitcoin. Some are even more aggressive, like Cathie Wood, for example, who has suggested a 19% allocation to Bitcoin. This way, you gain exposure to potential upside without jeopardizing your overall financial health. This strategy allows you to benefit from the steady growth of traditional markets while also gaining exposure to the exciting high growth potential of Bitcoin and other cryptos. It's a way to hedge your bets while keeping your portfolio diversified. Obviously, this isn't financial advice, as I've already said. Index funds that include crypto. You can now invest in index funds and ETFs that include Bitcoin or other cryptocurrencies. Obviously, we haven't got a Bitcoin ETF here in the UK, but you can access ETFs that give you exposure to crypto. Ask below in the comments and I'll tell you what index funds I invest into that include crypto. Funds like these combine the best of both worlds by giving you exposure to traditional stocks alongside crypto assets. This means you can diversify even further, gaining exposure to crypto without directly buying and storing Bitcoin yourself. It's an excellent option for those who want exposure but prefer a hands-off approach. You can also invest into individual stocks that give you exposure to crypto. Two obvious choices that I invest into are Coinbase and MicroStrategy. Conclusion. What's the key takeaway from this video? For me, index funds are an excellent starting point for anyone looking to invest, offering stability and proven returns. Bitcoin, on the other hand, adds a layer of growth potential if you're willing to stomach the risk, if you can handle the risk. The best part, you don't have to choose. With a balanced approach, you can leverage both to build a diversified portfolio that fits your financial goals. Remember, investing is personal and there's no one-size-fits-all strategy. Want to learn more? Subscribe to this channel, hit the like button and comment below with your questions. Let's smash this bull market together. Anyway, good luck with your crypto investing over the next 6 to 12 months. And by the way, if you look in the description below, I'll include another video all about index investing to improve your learning and another video all about Bitcoin. Thanks for watching.